is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Mike Vandenbos, VP of Business Development of KingsCrowd. KingsCrowd aims to empower everyone to invest in startups confidently through a suite of products, including research, ratings, data analytics, founder interviews, and financial products. Mike, thank you for joining us.
A pleasure, Hall. Thanks for having me.
Great. So where are you calling from today?
Richmond, Virginia.
Cool. Great. So can you tell us a little bit about your journey as a serial entrepreneur and startup investor?
You bet. Well, in the startup world, it started, I think, in 2008. I was on a kind of a little sabbatical, taking a break from work. And I was reading a book by Michael Lewis called The New Thing. You may have read that, Hall. It's about Jim Clark, who started Netscape with Andreessen. And I was just really floored by the incredible energy that a startup could have when there's a product market fit and there's an opportunity, there's a marketplace. And after putting that book down, The New Thing, I just said, I want to be in this space. And I didn't know anything about coding or entrepreneurship. I knew nothing, but I just thought I've got to start somewhere. So I went to a conference called Northwest Entrepreneur Network. They were having an entrepreneurship conference, and I sat there, and it was enjoyable. It was a one-day conference. And after the conference, I noticed a small group of people gathering up in the front. And I said, well, who's that? What are they doing? The conference is over. So I walked up there and they said, hey, we're doing Startup Weekend. And Mark Nager, who just incredible work, him and Clint Nelson, they started the Startup Weekend movement with the Kaufman Foundation. And this was maybe the first or second year of it. So I said, well, sign me up. It was $99 and included free pizza and Coke. And it was 2 days of build a company in a weekend. And Hall, when I was in that Startup Weekend, I had to pick up my jaw several times because I was like, oh my gosh, they let people pitch an idea. They gave people 60 seconds to pitch an idea on Friday night. Then they formed companies, going around the room. And then Saturday morning, people showed up with their laptops and they started building a company. And I knew nothing about this. And I just kind of sat there and participated. And then on Sunday night, they gave demos. I was like, wow, they actually did it. And so I continued to go to these startup weekends, and while I was there, a gentleman named Dave Parker, who's a very successful author and speaker in the startup world.
Great. So what inspired you to get into the field of business development, especially at KingsCrowd?
I noticed was there was a lot of transferables from my background in starting companies and sales. There's transferables to the tech world, primarily how to build relationships and how to do consultative sales. And so I've always enjoyed consultative sales. And so that's what got me motivated to apply that into the business world. And there's a few companies I worked with in Seattle that I got to actually build the sales team from the ground up and then move into enterprise. It's just very satisfying.
Great. For those who might not be familiar, can you explain what KingsCrowd does?
Sure. So probably the best way to explain it is if you think about how entrepreneurs have access to resources through accelerators, right? The mentoring, some of the growth software platforms that will donate their software for these startups, the office space and all that. They just empower these founders with incredible resources to launch. Well, on the investor side, there's not a lot there. So KingsCrowd came along and said, let's build a due diligence platform so that investors can discover these companies in minutes versus taking months to go out in.
So what sets KingsCrowd apart from other investment platforms?
So KingsCrowd, we've been tracking every Reg CF and Reg A plus going back 6 years. So we've tracked over 8,000 campaigns. And so it's allowed KingsCrowd to have some very meaningful objective data. And we put that into our due diligence platform so that when an investor's looking at it, they have a lot of benchmark data.
Great. And so what is the potential reward? How much are companies selling for there?
Well, as far as the potential reward, we're not a platform where you raise money. We do provide investors with the due diligence data sets. So as far as the reward, it gives investors a much more efficient way to analyze companies and make an investment. We also have a rating system where we have 3 senior analysts that'll actually interview founders. They'll check the Form C data, make sure it's accurate, and then we have a 5-star rating system. And so the rating system isn't, it's not giving an investor advice. It's saying, hey, we've done diligence at a very high level, and these are companies you make sure you don't want to miss taking a look at.
And then how did KingsCrowd's due diligence tools help both the retail and the accredited investor make informed decisions? What's unique about it?
Well, if you think about, at least from the online capital raise, there's about 600 active raises. And these are going on, there's 94 platforms out there, but about a dozen of them really have 90% of all the raises. So to have to go out to each platform and study all the campaign pages, very arduous. With KingsCrowd, you can do that in literally 5 minutes. You can choose the filters you want, like, hey, what's the valuation? What's the revenue multiple? Do you want to, invest in minority founders? Do you want to invest in experienced founders? What state do you want? We have about 30 different filters you can choose and due diligence in literally minutes, which would otherwise take months.
So how can the crowd help with these fundraisers?
So, the Jobs Act was signed in, I think, in 2012, and it really kicked off in 2021 when the Reg CF limit was raised to 5 million. And so there's been, I think, close to 2 billion already raised using online capital formation. And one of the things we're hearing from founders is that they're able to connect with investors like never before, right? I mean, investors can reach out to the founders on these campaign pages and have chat sessions, and startup founders can engage their customers to become investors, and investors will oftentimes become brand ambassadors. This is really the IPO as it was meant to be, because when you think of the public going IPO, very, very arduous, millions of dollars. With crowdfunding, it brings the startup to the crowd, and it allows them to engage in a more intimate way. And those campaign pages, you go to, WeFunder, you go to Start Engine, Silicon Prairie, when a raise page is put up, it allows an investor to really get the whole story. And that's a very special thing. There's videos, there's pitch decks, all those things. A lot of resources there.
And so what advice do you give to someone before they launch a crowdfunding campaign? What do you tell them to do before they kick off?
Use Google and YouTube. Google, Google, equity crowdfunding. Go to YouTube, watch some, like your podcast, listen to your podcast. As far as KingsCrowd, though, I would say go to KingsCrowd. We have incredible resources that are free. We do have a monthly subscription, our Edge product. That's once you're ready to invest. But up until that point, we have Chris Lestrino, our CEO, has interviewed hundreds of CEOs. So you get to meet CEOs that way. We have market data. Brian Belay, our VP of product, he's a serious OG in the equity crowdfunding space. A lot of great articles. Our senior analysts have written articles. KingsCrowd is a plethora of resources for someone that wants to invest in startups in the online capital space.
And so what are KingsCrowd's plans for the future?
Well, Hall, I envision a world where investors can go into their laptop, and in the system tray, there's a little icon. It's a KingsCrowd Edge icon. They click on it, the KingsCrowd dashboard pops up, and an investor can see all the active raises going on in real time, and they can make a decision in literally minutes to invest in the next cool company. And they could set the filter to say, I live in Virginia, so I want to see every company that's in Virginia and get involved. So I think that's an exciting world where there's due diligence at your fingertips, and it's objective. It's very high quality, professional grade. And I think, the big thing is that KingsCrowd we're excited about equity crowdfunding because it can have such an impact on local economies and, of course, our nation's economy.
So what companies do well on crowdfunding? If you had to generalize, what sectors do you find doing the best?
Well, we actually had a team meeting about that. It would seem that typically like consumer product good, companies that would, being able to tell a story is so critical, because the key to equity crowdfunding is you have to have an audience. If you don't have an audience, I think you're dead on arrival. So that doesn't mean it has to be like a consumer product good or something like that, but it can be B2B. Biotech is big. And there's a company out there that was raising for prosthetics. It was an incredible story. There's a company, it's called Pirouette Medical. They're displacing the EpiPen industry by creating a little hockey-sized disc that can, give the injection of the treatment in a more safe way than taking a big pen and jabbing it in your leg. Pirouette Medical is done exceptional. They're a medical company. There's really any industry to apply, but the key is that they have an audience. The startup has taken time to build an audience, because for an equity crowdfunding round to be successful, typically they should have whatever their target raise is. Let's say they want to raise $1 million. They ought to have about, a couple 100,000 committed just from their audience. And you can do that by testing the waters. These platforms will allow you to test the waters, which is get, opinion from potential investors. But more importantly is that you nurture your audience before and tell them that you're going to do a campaign. And because whenever a campaign has momentum, it builds on itself. I think back in the day when like Kickstarter and Indiegogo kicked off, I remember there was a statistic that said if a campaign hits 22% of its goal, it has a 90% chance of raising its target.
It seems like you need to have a pretty good network to run a crowdfunding campaign. If you don't know more than 5 people, it's going to be hard. What's your thought there about the size of network you need to run one of these before you jump in?
Well, it's a typical funnel type equation where if let's say the average check is $1,000 for equity crowdfunding. So if we can take statistics from 2023, I think there was about 1,500 raises. The median raise was 366,000. I think the average check was about 1,200. So let's say if you want to raise $1 million, it's important that, let's say you get, several hundred people that in your audience that you think that are, true believers in your startup and that they would make an investment.
Have you seen any conversion rates from number of contacts to number of investors?
Nothing just anecdotal. I don't think anything I could really share about that. But I will make this point is that one of the questions that by the way, KingsCrowd, we just launched a educational programming for founders, which, we do an intensive boot camp on equity crowdfunding. It's a 4-week boot camp, 2 hours a week. We bring in all the industry experts to coach the founders. It's an incredible opportunity. And one of the main topics that we focus on is, is it important to have a lead investor, right? Because with angel and VC, angel rounds, typically a lead investor is a game changer because, they're all following. Same with, on the VC side, when a founder goes into, on Sand Hill Road and they start making the pitch, who else is in this round? Well, they're looking for a lead VC. Same with equity crowdfunding. If there's a lead investor, that creates a lot of credibility because, end of the day, most people, they don't have hours and hours of diligence. So they're looking for a credible investor to put their stamp on it.
One thing I've noticed about crowdfunding campaigns that come to me is they tend to have very, very high valuations. What's your take on how they choose valuations in the crowdfunding world?
Oh, I love that question because I think that's what's given equity crowdfunding kind of a stigma. That's why VCs, and angels maybe don't even take it serious. In fact, one of your prior podcasts, it was Louise and Miriam Klein. Do you remember that one? That
Yes.
Podcast? So there's a quote there where Miriam Klein said that he would a Keiretsu meeting. Someone asked in the crowd, they said, "Hey, what's the payback we can expect? What's the multiplier here?" And the founder said, "You mean we have to pay this back?" So, I mean, we see valuations, or we see founders who aren't really clear about, hey, investors want to know, will they get paid back? When? What's the multiple? In the equity crowdfunding side, yes, there has been a lot of high valuations. However, KingsCrowd, we believe that equity crowdfunding kind of 3.0 that's the next wave where there's a lot of more rigor being driven into the equity crowdfunding world because companies like KingsCrowd are providing due diligence, take more serious the return that they need to provide investors, right?
And as you've seen the crowdfunding space evolve, what's one thing that happened that you didn't expect it to do? What surprised you recently about this space?
Well, when you go back to the Jobs Act, so it took 4 or 5 years for the Jobs Act, once it was passed, for it to actually be, executed on. And then took another 5 years for some of the rules to really be meaningful or to really get traction. And then I think recently there was a company called Mainvest that went under. They were a crowdfunding platform that was primarily on the debt side. However, they seemed like a very qualified company, and for for them to go under, one of the, as I was reading blog posts about it, it said there's just a lot of regulatory stuff a lot of hoops they have to jump through. So I've only been in this space like really full on for the last 6 months. I've been studying it for 10 years, but I jumped into KingsCrowd because I saw the importance of focusing on the investor side along with the founder side. And so I'd say the biggest surprise I found is that, you know, regulatory lift and burden, how it can, I mean, of course it's important, but you even take like, the accredited investor, definition, right? 200,000 yearly income over 2 years, $1 million net worth. That's an incredible high bar for someone to be qualified to invest. So there's a lot of rules that need to come back to what really makes sense for Main Street, businesses, as well as, Sand Hill Road funded businesses.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, there's two things. Is that I went to a conference a couple weeks ago, the Reg A conference that Deal Flow put on. They did an excellent job. There's about 150 people there, a lot of the industry experts and great panel talks. And I was just really, it was very satisfying to be back in real life and, to be just having great conversations with people in person. And there was a gentleman sitting next to me who's an investment banker. I said, "Hey, why didn't you come to this conference? You're in investment banking." He's like, "Well, I've been seeing it pop up on LinkedIn everywhere, and I know that equity crowdfunding, it has so much potential. I need to learn about it." He goes, "You can only watch so many YouTubes before you need to get out and meet people." So I wanted to come to this conference. So, getting out there and, going to these conferences, and then whenever there's a showcase where you get a chance to meet a founder, because there's a lot of great accelerators out there putting on showcases. KingsCrowd, we put on a showcase in Chicago, very well attended, just a lot of great reviews. So getting out there in real life and meeting founders and meeting other investors, that's key. And then two, really, and Hall, you've done a really remarkable with your Investor Connect. It's just so it's incrementally giving investors the tools they need to really make informed investments. And, because there's such a long horizon, 8 to 10 year hold, investors really need to continue to be tooled up and encouraged. So I say the thing that we need to keep focusing on is drive more resources into investor education and investor due diligence. And so, yeah, I think those will be game-changing things.
Well, that's a great point. So how best for listeners to get back in touch with you?
Feel free to shoot me an email, mike@kingscrowd.com, or just go to our website and check out our resources. And again, if you believe in that opportunity where, due diligence with a couple clicks, we have a great software that provides investors with that capacity.
Well, we'll include your contact details in the show notes. I want to thank you for joining us today. Hope you have you back for a follow-up soon.
Thanks, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.